another day, another discussion. And today I want to talk about a couple of items that are a high question topic that I get all the time. And it's probably my number two or maybe my number three most asked question from my clients and or also from my potential clients. And I speak with people almost regularly on a daily basis, whether it's on the phone or a text message or some type of a DM, because you could DM me on Instagram. But I know this is going to go on YouTube right now. So a lot of questions I get are frequently asked questions, and one of the most prominent questions that I get is people that are actually interested in working on their credit report. They have taken the time to either notify me or notify someone else, but they're taking the time to look into their credit history, look into their credit profile, because if you don't look into it, who's going to look into your own credit profile? It's got to be you. So you need to have that initiative to take a look at what's on your report and make sure that everything on there is um, the way you want it to be, meaning no errors, no issues, no delinquencies, no problems on your report, because if there are, we need to clean those up. But you want to take a look at that. And I went through that a couple of videos ago, but today's video is what is a credit inquiry? And that's probably my number two question that I get often. What is a credit inquiry? And not only that, what is it, but if there are more than one, what are they? So I'm going to go over that today in this video, that there actually is a couple of different types of inquiries that actually show up on your credit report. And some of them are not as bad as the others, but I want to talk about the two. There's actually two types of credit inquiries, and one of them is a hard inquiry, and the other is a soft inquiry. But before we get into describing and deciphering what exactly is a hard inquiry and a soft inquiry, let me just tell you about what actually is an inquiry. So a credit inquiry occurs when a lender or a credit card company checks your credit report. Does that make sense? So it's when a lender or a credit card company is actually checking your credit report. It's not when you check it, but it's when a lender or a credit card company is checking your credit report. When they do that, that is what's called a hard inquiry. Now, this can happen in a couple of different factors. When you're being looked at on your credit report, right? It's when you apply for a loan or when you apply for a credit card. Now, when you do either of these two items, you're actually applying for a loan. It could be a car loan, it could be a construction loan, it could be a business loan, it could actually be a mortgage for a home that you're trying to buy. You're applying for a loan, and when you apply for a loan, it's what's going to trigger a hard inquiry, because the people that you are or I should say the institution that you are asking for a loan, meaning you need to borrow some money because you don't have, like for example, $500,000 to buy a house. So when you're applying for a loan, you are asking the bank or the mortgage company for money. So what they do is they look to see who you are. Are you somebody that's going to be responsible and worthy to pay them back on a timely fashion, whatever the contract is, right? On a monthly basis or on a bi-monthly basis or whatever you have negotiated. So they're going to look at your credit history. They're going to look at your whole entire life, so to speak, and find out what's on your report. And do you have late payments? Do you have delinquencies? Do you have any collections? Do you have any charge-offs? Do you have too many accounts? Or do you have not enough accounts? So all of these come into factor when you are being looked at when you apply for a credit or a loan. Does that make sense? So what you're doing is you're applying for a loan. You are actually asking an institution, can I borrow some money? And most likely they will lend the money, but they will only lend on account of their standards. And so what they're going to do is they're going to look at your credit report. And when they look at your credit report, it's either going to be good for you or it's going to be bad for you. But nonetheless, when they look at it, it's going to be what is called a hard inquiry. That's what we're talking about today, a hard inquiry. So um, now when you look at your credit report, when you take the time to look into your credit report, that is not a hard inquiry, because you have the right to look at your own credit report. Does it make sense? But when another institution is looking into your credit report, then it's going to trigger a hard inquiry. And here's what happens when a hard inquiry happens: when a creditor, such as a credit card company or a loan institution, looks at your credit report, it's called a hard inquiry, and that is going to actually affect your credit score. Right? Does that make sense? So it will actually lower your credit score slightly, because it's a hard inquiry. And so if you have too many hard inquiries, then you're gonna get hit and then get hit again and get hit again. So that's why I tell my clients, when you apply for a credit card, you don't want to apply too often, because it's going to be a whole bunch of hits. It's going to be hard inquiries, and then it's going to lower your credit score, and that's not going to be good in the long run. So you kind of need to be strategic about when you apply for certain items. Like, for example, I flew a lot this year. I flew cross country many times this year, and I flew Delta, American Airlines, and United. Those are probably my three favorite airlines. But every time you fly on those, even pretty much every airline, they're going to hit you up with the credit card application if you haven't noticed already. And so if you're not careful, you kind of want to be selective of when and who you're going to apply for, right? Because let's just say I flew 3 times in a month, which I have, Delta, America, and United, and I each get a credit card application from each one of those, and I apply for them. Well, that's 3 hits in 1 month. That's going to affect my credit score, and so I don't want that to happen. So I'm selective, and I need to be a little bit more wise on when and how often I apply for a credit card, if I do. So that's a hard inquiry. Now, the next type of credit inquiry is what is called a soft inquiry. Okay, so a soft inquiry is similar to a hard inquiry. However, it's when you check your own credit score, or it's when a lender checks your credit score for a pre-approved offer. It's not the actual offer itself. It's not the actual full application. It's what's called a soft inquiry. It's a pre-approved. Like, you might have a pre-approved inquiry on a credit card, or you're pre-approved for a home loan, right? If you want to go buy a house, there's a lot involved in buying a house if you haven't noticed or haven't done that yet. You want to wait, like a friend here wants to wait for the market to go down. That's you might want to do that. But at the same time, you need a realtor. You need to get pre-approved so that when you go look at these certain houses, you're going to be looking better for the seller. You could say, "Hey, I'm already pre-approved for this $500,000 loan," because you went to a mortgage company and you got pre-approved. It's not the full approval, but it's a pre-approval, so it's a soft inquiry. And then when you actually apply for the loan, then that's what's considered a hard inquiry. And if you get denied, then now you have a denial on your credit report, and then you also have a hard inquiry. So pre-approval is good. A lot of times you see these pre-approved credit card applications, meaning that they've probably done a soft inquiry. Like, if you go to a department store, they might do a pre-approval to see if you qualify for the department store card. And then when you want to go ahead and jump in and do it, then they would do a hard inquiry. So pre-approval is what's considered a soft inquiry, as opposed to a hard inquiry. But soft inquiries do not affect your credit score. And as a matter of fact, when you check your own personal credit report, which I would advise you do sometime, it's what's going to be called a soft inquiry, and it doesn't affect your credit report, because I check my credit report every month, and you should be checking yours every month as well, because you never know what type of activity is on your report, whether it's fraud or whether it's something you did that you may or may not be aware of. Checking your report on a monthly basis is a good thing to keep on top of your financials. So, so anyways, back to the topic at hand. There's two type of credit inquiries. One is a hard inquiry. That's when a credit card or a loan institution is checking your credit report. That's going to be a hard inquiry, and it's going to affect your credit score, and it's actually going to lower your credit score. The second one is a soft inquiry. Now, that's when you check your credit report, or maybe a credit card company or some type of agency is checking you on a pre-approval. That's a soft inquiry. Those don't affect your report. Hard inquiries do. And so what happens is, just so to kind of give you a better idea of how this whole credit report works, when you have too many hard inquiries, um, 5, 10, 15 hard inquiries in a matter of half a year or so, or months, it's actually going to look bad on your credit report. So you don't want to have a lot of hard inquiries. If you do have hard inquiries and you know that you're going to apply for a loan, maybe to get an automobile in the future, or maybe your home. Let's say 2025 is the year you want to buy a house, right? I think 2025 is what a lot of people are really striving to buy a house this year because they didn't get one in 2024. And thank you everybody for listening. So if 2025 is the year you want to buy a house, you should be thinking now how your credit looks. You should be looking at your credit report, seeing what's on there. And if you have a lot of hard inquiries, because they stay on there, they will stay on there for years. And you need to start cleaning up your credit report now so that in the summertime, I'm just surmising, in the summertime, the springtime, the fall, when you're ready to go buy a house in 2025, you can walk in with confidence knowing that you have taken all of the hard inquiries out of your report. You've taken any activity that you don't want others to see, such as delinquencies, late payments, or maybe even collections or charge-offs. If any of these are in your report and you try and go get a home loan, it's going to make that much more difficult for you to get approved for a loan. So you want to be aware of what's on your credit report. So, the question is, what is a credit report? A credit report is basically your financial history of everything you've done financially. A credit report can go back for years. It can show you all pretty much. It's a report that the bureaus put together, and it's once a month get updated. Everybody gets an updated credit report one time a month, so you should be checking it because it's going to have your past addresses on it, wherever you've lived. It's going to have your credit activity. It's going to have any loan activity. It's going to have your payment activity. It's going to have your debt your credit balance ratio in there. It's going to have pretty much your whole financial history. And if you're not sure how it looks, then you don't want to be surprised when you go to buy a car because you need to get a loan, or maybe get a student loan, or a home loan, or a business loan, or a home, mortgage. You don't want to be surprised and be denied. So if I were you, you should be looking at your credit report now so that in the future, let's say your goal is to buy a house this summer, which is a fantastic goal. I would encourage you to look into buying a house. You want to make sure that your credit report is nice and spick and span so that when you go to a mortgage company, you will be approved, and you will not only get approved, but maybe get it approved at the best rate possible. Because the higher your credit score, the better you can receive a loan at a low interest rate. The lower your credit score, most likely you will, if you do get approved, it's going to be a high interest rate, and then that's going to make your monthly payment much more higher or difficult for you. So if you can, um, take a look at your report now. Like I said, even if you did look at your report, it's going to be a soft inquiry. It's not going to hurt your credit, and then do the necessary actions to clean it up. And if you need help with cleaning up your credit report, if you need help looking at your credit report, if you need help reading and understanding your credit report, that's what I do. I have clients from all over the nation, and we work together and we look at their credit report, and we have a plan of how to get any negative items off their credit report so that it can be a clean report, because a lot of my clients have goals. They have goals to buy a house, to buy a car, start a business. And so they are pre-active, right? And so that's what you want to do. You don't want to be looking at a house tomorrow and then realize that your credit is not in the best shape. So take a look at that. If you need help, go to my channel. I have all kinds of videos on this topic, and you can contact me. Go to my website, and you can request a free consultation, and we can work with you and help you get you going on a good path of finances and financial freedom. So I thank you for listening. I appreciate those that have chimed in today, those that have made some comments. And I will be back tomorrow for another live video, most likely. I know this is the end of the year. Goodbye 2024, hello 2025, and there's some good things happening in 2025. So keep an eye on this channel. And if you need help with anything credit in the credit business, just contact me, and we could set up a consultation, and then I could talk to you, and we can go over your report and see what we can do. But again, thank you for watching. Thank you for listening. And I hope you all have a blessed night, and God bless you.